I'm announcing right now that our askSlim Premium Services free preview is starting in a week. All right, so now we are in this MarketWeek election special, and what's different about that is that, well, what I'm going to do is bring analysis on the 5 major markets that I normally look at on a short-term basis. And I'm really, I'm doing this and I'm thinking, well, do we want to do this more often? Well, you can comment and tell me as we look at a bigger picture, but not the short-term picture today. So election special, major markets for 1 to 3 month outlook. That's what we're going to look at right now. All right, so we're going to switch over to the charts, and we're going to start out by looking at weekly charts. So this is the look at the, I promise I'll give that to you, at light crude. Now, what I want you to see, if you're kind of new to what we do right over here, is that the analysis we look at is cycle analysis. These are these arcs that you see in the bottom are called cycle brackets. It's just a drawing tool, and it's a guide for us as we look at the repeating rhythms in the market. Cycle analysis is an art form. It's a visual depiction of the flow of money. And of course, flow of money is ultimately the most important aspect to market movement. And in this case, what it tells us, based on cycle configurations, the shapes of them and how they react around important areas, whether they're positive or negative, whether we're looking for a buy or whether we're looking for a sell. So we put in the supports and resistances, and we put in indicators that show us momentum conditions. And then we project based on the what we call our configurations of the cycles and translations. You can learn about that by going to askSlim.com, click on the workshop tab, and there's a whole video there for you to look at for free with some explanation about our workshop. So I think you'll find it very interesting. So this is light crude, and we're looking again for 1 to 3 months. We're looking at the intermediate term right now. So what we see in here is quite negative. So you can see the movement of the cycles right in here. So the low comes in here, the low comes in here. It was a little longer cycle, so we noted a shift in there. And then the low do right over here, which came. And then a rally do. This is the rally phase. This is the rally phase. These are the rally phases. You can see that. And each of those, of course, bring rallies. And the declining phases bring declines. What we have here is a very negative occurrence. Now, my analysis before this was that we would see a test of these highs and move into the fib extension target zone. That would have been about a 70% probability of that happening until this week. Now what we had was the low made, the rally come in this rising zone, and then a breakdown underneath this key low. What that sets up is a pretty negative condition right now, as what we have is a, now I'll try to explain this to you very, very briefly. What we have is this rising phase here ending. So you get the rally, and then the decline goes all the way through this whole time period, as you see right there. That says that we're going to see a decline in oil prices all the way through March. So that is the basics of what we look in here. The pattern is negative, and the momentum is negative. So it's a negative pattern, a negative momentum right over here. But now we want to project. And again, I'm going to talk about the presidential election and the potential results. And I'm going to stick with, if Trump wins, he holds the Senate. And if Biden wins, he wins the Senate. And that's what makes the most sense under those conditions. So what I want to do is look at both sides of those and do some projections in all 5 of these markets that we're going to look at right now. In my opinion, if President Trump wins, the likelihood of the decline that we see in here is probably smaller, and we'll get a higher low as far as that goes. Even though this is negative, you probably come down to about this area of about between 30.5 and 29 right over here, and that is a reasonable target in here. However, if Biden wins, then the odds are that the decline will be very fast in light crude. as Trump's policies have brought you this basically sideways action in here, and supply demand situation hasn't been great. But Biden will be anti-fossil fuel. Harris is very much that way. There's a lot of denial whether or not they are going to threaten to end fracking. They probably would reduce fracking if they could, and all of that is negative for light crude. So I think that under the case of the Biden win, this would fall much sharper, and then there's risk of a decline down over here to 27, down to about 24.5. I think would be the steeper decline. But overall, the pattern is negative. The momentum is negative. The cyclical pattern negative. The only way to fix that, if there was a pretty good rally and you got out above this level over here, above 42, this dash line is called a VTL, a valid trend line, and that you can see it kind of rides down the channel that we're looking at right here. And the break of this low is what's negative, and that's what's the note here. The next low is projected into March, and a move over 41.80 actually improves that and repairs it, and so it will not be a negative forecast anymore. So that's kind of the look at the light crude market, taking into fact, adding in the factors of which of these candidates are our next president in January of 2021. So that is a look at light crude. Now we're going to switch over and we're going to look at the gold market /GC. This is a much busier chart. For those of you that are brand new, what I want you to see is that we've had some just fabulous analysis in here. This has colored phasing in here, and when you look at that, you're going to say, I've never seen a chart that is that messy. Well, truth be told, it has a lot of information on it. The green zones are positive phases. The yellows are corrective phases. There's no red in here because there was nothing negative that occurred here in all of this couple of years that we're looking at. Now, really what I want to show you is that after this yellow corrective zone, we projected to the upside. And the upward impulse from that was $180 as it had a big upward move in this upward decline. After this correction right over here, it moved up $300 right over here. After this correction, the upward impulse was $340, and right over here we said we would get a move of more than $300 to the upside to $2,000. We actually got a $435 upward impulse that got you to almost 2,100. So the analysis in here has been absolutely great. We have a lot of people writing to us about how well they have done. So for the near term, let's first look at the pattern and the momentum. Well, the pattern is negative, neutral to negative when I look at this overall, if we're not putting in any factors regarding the election coming up. We have what we are in this yellow zone again, like we had over here, and we had a lot of sideways chop. I would guess that would be the case if the election wasn't taken into wasn't a factor here, where you'd probably get down to about 1830 sometime out into December, and then that opens up a much more favorable period. We have all of these cycles turning up in there. Now, if I factor in the election, well, I think under the status quo of Trump winning and holding the Senate, I think that you will get that. You'll get a decline down here to about 1830, and you'll probably get a decline down to 1760 if there was a lot of liquidation going on in other markets. So 1830, 1760, that's takes you out into around January. So that's about we're looking at 2 months. And then after that, we don't have the projection in, but then this would be turning up again. And all of that makes sense to us because we think that no matter who's president, the dollar's got problems, and there's going to be a lot of money printing still. So we think there'll be another one of these upward impulses that you see coming up afterwards, and it very well could be another $400 or $500 from some low over here. That would be out January, February, March of some advancing period. Now, under the conditions that that Biden wins, it's going to have a harder time falling. I would be very surprised to see it get under this 1830 level, though it could happen. And I think that the real possibility of a dollar destruction is much, much higher under Biden, and that we will see potentially, and I'll show you the dollar, a very, very hard decline in the dollar, and that because of all of the spending that's likely for all of the programs that they're likely to put in. They're going to have to borrow all that money. That means the Treasury is going to create massive amount of treasuries. The Fed is going to buy them from them and pour the money in through the banks, and that money will find its way into asset prices. And gold very likely in our monthly projections up to about 2,600. So that would be a much more bullish scenario for the gold market under a Biden win. Either case, we think the market is going to struggle out through late December, early January, and then get into a much, much more positive period looking at the gold market. So now we're going to look here at the dollar market, $DXY. So the dollar, in our opinion, right now is rallying as a safety bid is coming into the market. The pattern is suggestive of a decline into that nested area that you see there for another month. Decline out into late November to early December. So we would expect that you see the big diamond top that occurred in here. I can blow this out and you'll see that that diamond top came after some very beautiful cyclical patterns in there. And now what we're looking at, get this back for you, is a declining period out ahead of us. Now, we have, if President Trump wins again, I think the safety bid goes away. Because the stock market will have in our opinion, a brief upward move, and I'll show you that in a moment. So that would send this back down pretty significantly, and I think you'd break under this 9170 area under that condition, sub 92. And then after we get past this period out into December, January, you can see the range that we have in here. That's near 95, 94.70 up there. That's where we think it would probably get, right up over in that area. That's in the scenario of a Trump win. Under the scenario of a Biden win, I think that it's going to be hard to get the dollar to move down. At all, because the safety bid will be in if I'm right and the stock market is falling really sharply, and then it's going to be hard to get underneath these levels. Maybe at some point you get down to 92.5. It's not that far down, and then again this more favorable period out here, December, January, February, where you get a rally. However, it's going to be much tougher to rally under those conditions. And hold the rally because the dollar is very, very likely to be forecasting a tremendous amount of printing coming forward, and we think that after some brief rally period out over here, then there will be another big downside waves like you had here in this cycle and down over here in this cycle. I think you're going to get some very large downside waves out over here, and that's under the condition of a Biden win and all of that potential spending. Now, there's also the potential that the dollar doesn't have that big of a decline now under either case, just maybe tests these lows in here, and then sometime out next year when the policies really start to get established, I think it does a lot worse. So right now, I just think you're in a choppy period in this range that we're looking at, just under 92, just under 95. With a much less favorable condition under a Biden win because of the prospects of how many dollars are going to be created in there. So that's a look at the dollar, and I think either case, as you see, This is the end of a declining period coming out over here, and you can see the momentum conditions right over here are positive. So cycles bottoming in the next month or so, momentum positive. It doesn't make a case for a really big decline right now, but only some decline, and then a rally out into the early part of next year that I think fails. And the size of the failure is, I think, really going to be determined by who is the president. Next thing we'll look at is the bond market. So the bond market, this has our colored phasing in it. Also, our analysis in here has been spectacular. We looked for an important low to come right over here. We looked for a rally, and we thought that this was a resistance zone, and then we looked for a sell-off. We targeted it near 71. It got down here under 7, maybe 71.5. And now is trying to make a bottom in here. This cycle right over here is the one we're looking at. You could see the low here, how that lines up, the low here, how it lines up, the low here, and then the rising phase, the rising phase, the rising phase, and what's coming in here is a rising phase. So the pattern, we call this bottoming. The momentum is still negative when we look at that, and that says to us that the bottom, it's not showing a good sign of the bottom yet that we're projecting, but we do think that this bottoming pattern gets you up here, 176, 177.5, and that area is what we're looking at over the next couple months. The momentum in here is negative, as you still see, so it's got some work to do. Under the condition of a Trump win, so that was just the basic technicals that I showed you, I think it's mostly status quo. You're going to continue to see a tight range and maybe even tighter range. Gridlock will probably remain in place with the Republican Senate and the Democratic House and the battles that you have going on. I just think it'll be more range-bound action, as you see here in the longer term, with not a lot of changes. Now, under the condition of a Biden win, it's going to be much, much tougher to rally in here. There's the potential for the nature of the Fed to change somewhat, though you would think you would keep Powell. There's talk of Treasury Secretary being Elizabeth Warren. I don't want to comment on that, but you know that you'd have some changes under those conditions. There's potential for yield curve control. I think the potential is higher under that. Now, under a Biden win, I talked about a dollar collapse coming at some point. And under that condition, rates will explode because the government they'll anticipate the government needing to raise rates to control what would be a very, very sharp down move in the dollar. And I think they would do everything they can to combat the collapse in the dollar that could be very, very scary. And they would do that by changing their rate policy. So a lot has to do with the dollar as far as that goes. What we're looking at, though, really overall is that we're probably in a very choppy period. This is the 10-year cycle right over here. So if we get some rally in here, they're going to come down again. And then maybe out over here you get some higher prices in January, February, but then you can see we're forecasting more trouble out over there. So 30-year bonds, we're looking for around 176 to 177.5. With, as I say, under the condition of a Biden win, the risk really goes up of an interest rate spike in coming months. It could be past this 1 to 3 month period we're looking at right over here. I think that the bond market over the next couple of weeks is going to be a buy for intermediate traders for that move that we're looking for, 176, 177.5. When it was up here at those levels, we forecast under 172, and we got that really in time and price. It's been really good. So that is a look at the bond market. All right, so now what we're going to do in this Market Week election special is look at the stock market for our 1 to 3 month outlook. You're going to find this pretty fascinating. I'll tell you right now is that I'm following through, as I said in the beginning of the show, with what I think is a negative view. And the stock market is essentially telling me that. I don't, just tell you what's in my gut. We look at all of the technical indicators and all of the patterns that we look at, come up with some of the evidence. Recently, I have been discussing the breakdown of mega caps and the signals that they were telling us that the NASDAQ was going to turn weak, that the overall weight of those was going to affect the market in a negative way. And we saw earnings reports coming out and Apple moving down almost 6% on what, bottom line you could have said was good, but they're really having trouble selling iPhones in this environment, and their China sales were really weak, and the stock market is reacting to these mega cap weakness. And I was saying that if you get a rotation, the rotation into these really lower price stocks is not going to compensate for the declines that we saw coming in the mega caps. And we're really seeing that. So, of course, we have a lot of issues now that are coming in and around the election and COVID-19. And all of that I'm going to take into consideration as we look at this. So I'm going to switch over. I had the bond market up, but now I'm going to look at the SPY. Often at this point, I look at the SPX, but I wanted to switch over to the SPY because it's got some different analysis in here. First thing that I want you to see is we're looking back here from 2015 out to 2020. And you can see we had a great rally, and the cycle analysis is on here. And what I have in here I call the great megaphone right there is what got formed in here. And the market rallied to the top of that megaphone. Well, let's take a little closer look in here. And again, we're looking at cyclical analysis. So the cycles that you see in here, these are essentially the counts on the week. Sorry, that one is wrong. That one is 18 to the peak, and that's 24 to the low. 22 to the low. This is 16 to the peak, 18 to the low, 19 to the peak, and 24 to the low. And this one right over here, very, very long, which we haven't seen in years, 24 to the peak, and then a break here to 27 weeks on the low. This was a 35% drop right over here. This was a 10% drop right over here. And now something is happening in here. Something is happening here that is quite negative as we look at this. This is the S&P 500 weekly cycle analysis. And what we're looking at right now is a breakdown. Well, we'll call it a breakdown of the head and shoulders top. We'll call it a not quite a breakdown yet in the market as far as the important cyclical numbers go. So the first thing we're going to look at in here are the cycle patterns. And that is, you can see in here is what we call the minor cycle. And here's another minor cycle. This is how it looks when you look up over here. This is the dominant cycle right in here, which ran 27 weeks, which was very long. Normally, when you run long on the downside, it means that there's a lot of selling that's coming in the market, and that was a 10.8% decline. And it's true, the sellers did come in. You had a slight uptick in momentum in this period right over here. This is the rising phase of the dominant cycle and the rising phase of the minor cycle. You can see what happened here when you got both of them moving up together. You exploded to the upside. When you had a minor cycle decline, because of the upward force from the dominant pattern, you only get a small decline and then you move up again. Here, what's going on is that this rally failed right over here at the 78.6%, a little bit higher, almost a double top, and then rolled over. And once it gets under the 78.6%, in other words, the distance from here to here, it's now given up about 85%. Once that happens, it sets up a lot of risk. Once it gets underneath the cycle low right over here, which is at 319.80, it is a breakdown and declares a major top. So it's very close to that right now as we have this extreme weakness going on in the market. And now when I look at this, you can see the head and shoulders top. And that measures down to 290 basically right out over here. So this is 290 here. This is about 295 right there at the time frame of this minor cycle bottom. So with the cycle breaking down, momentum turning negative again, the head and shoulders completed and turning down. And if you go take our cycle analysis workshop, you'll learn how cycle patterns create all of the chart patterns that you look at. It's just phenomenal information to have. So right now we're in a very, very negative condition, and the breakdown is underneath 319.80 will be a dire condition. The probabilities of a sharp decline will be very, very high. And you can see our projection starting to form in there. Now I have two scenarios in here. Both are bearish. One is less bearish than the other. The scenarios are really based on the fact that what the market looks like in here is, it's, in my opinion, discounting the scenario that puts the most risk in the market, which is the Biden win. Let's first look at the potential for Trump holding on to the presidency, which, based on the polls, is a low percentage. If that were to happen, then the market would turn up. There would be a relief rally of very, very significant amount. I would doubt that it would get above this level, 354. If it did, it would really repair the market, but I really doubt about that. And that would then give you a scenario where once this cycle rolled over again, you will break under here. You'll probably get down to about the 38.2%, somewhere around 310. That, with the head and shoulders measurement coming up, you'd get pretty close to making that measurement right over there. I would guess that the target for the downside for this area over here is about 305. It might do a little worse out over here into March in this next cycle right over here. Under the conditions of a Biden win, I think that the risk is very large. I think that decline into year end is will be pretty high probability, as investors want to sell now, getting ahead of the big boost coming in capital gains. There are a lot of other big boosts in taxes that we could talk about that are likely, and it's been no secret. I'm not making a judgment. I'm just telling you what Biden said. And that, in my opinion, especially under the consideration of capital gains, would bring a lot of selling. My opinion is that this minor cycle here, you would see this head and shoulders top satisfied in the minor cycle, with the decline down to about 288 would be the target right over here, and a potential even to get down over here around 273 if that happened. Under the Biden win, we would expect again out over here into this December period, early January, to get a rebound similar to the pattern that we see here under the Trump scenario, but then not getting as high, rebounding from a lower level, and then the risks out over here far more significant, potentially getting down as low as this area right over here, which is 272 or so, and this being about 250 out over here into the March time frame. So under the scenario of Trump holding the presidency, which I think is the lower odds, you get a relief rally somewhere up here and then another decline. Under the condition of a Trump win, of a Biden win, I think you get a much sharper decline immediately. People really trying to get out of their longer-term holdings before the capital gains tax goes up and before we run into all of Biden's policies, and then some relief rally out over here, and then a much bigger decline out into late winter and early spring for the stock market. Again, I'm not bringing you political opinions here. I'm simply bringing you some of the evidence, in my opinion, about the policies that are coming up and the patterns that the stock market has brought to us to analyze, which right now are quite negative. I want to say that the NASDAQ, the Russell, they are not quite as deep as a decline right over here. The patterns are not quite as negative as we see in the broader market here for the spiders, but they are still showing a very, very similar toppy pattern. And again, the likelihood of declines coming out in through the winter time for the stock market. This is, of course, quite a negative scenario, and I have warned about the potential for this for the last couple of weeks, and the top is just really forming. And if you want to be a seller, I think that there's still time. If you want to be a buyer, you can see in here that I think that there'll be a better opportunity for that, based on what I think is the highest probability scenarios, based on what I'm looking here in the stock market. That is a look at the stock market, and I think some very, very clear patterns that we're looking at, and hopefully it was educational to you and helps with your decision making moving forward. Market Week election special, stock market 1 to 3 month outlook.